All right. Good afternoon, everyone. Thank you so much for being a TRT's newsletter subscriber. Appreciate you guys. Wanted to share a special video with you guys and let you know some of the strategy changes that we're going through and go through some of the charts. Hope you guys find this video useful. This video has been recorded on Wednesday, January 7th, 2024 in the afternoon after the market closed. So, I want to just kind of share with you guys the election year statistic. As you know, 2024 is a presidential election cycle. And typically during this time of the year, all right, at least the first half of the year, you're going to see probably minimal gains on the indexes throughout. All right, most likely, most talking about the S&P 500 index, but you will likely see more trend of come up in June, in the summer months of June, July, and August, and then pullbacks in September, and possibly a December rally. All right. So what do you do if, now that the market's been chopping around, the S&P 500 around the 4,700 to 4,750 level? We haven't given up the 4,700 level, but we definitely haven't given up the 4,750 level, which was an important benchmark for the index. And we lost that so far this week. Going into the latter part of January, February, and March, you're likely going to see somewhat smaller gains, and you're likely going to see some of the markets continue to chop. Now, what that means is simply that we're going to have to adjust our strategy. That means that we won't take up any swings. We will be more of actively trading the markets on the minute charts, typically the SPY, the Qs, and also some of your, mega cap stocks. And our group also do trade the ES and NASDAQ futures as well. So take a look at what's happening on the chart here so far. You can see pretty much since December 14th, while we did experience a new high, we double topped it from December 28th, and then earlier Friday of last week, we tried to break out of the zone here and was quickly rejected. And we've been pulling back since last Friday, all right, or since last Friday because of that hanging man candle. So basically, I mean, we're just really right back to the December levels. And you know what? I wouldn't be shocked, quite honestly, that we continue to move throughout this channel until something breaks. Now, some of the things that have got the market quite worried is about, again, the Fed speaking all the practically every day. Their message to the public or to the market has really been confusing at best. All right. Right now, they're still pricing a six rate cuts this year. However, it may not happen in March or as soon as the market is anticipating. So right now, the futures swap is about 50% for March rate cut, and that may not even happen. So the market has just kind of been all over the place, left and right. So what this really means is that you get an opportunity to actively just trade the markets throughout the day, and that's what we've been doing. Now, the SPY did lose a 20-day moving average with lower volume today. Now, it did print a nice hammer on the day, and I'll take you over to the Qs, and the Q actually has a more full-on hammer look and closed above the 20-day moving average. So that is very, very positive. At TRT, we still believe that there will be one more new high. What that means is that am I saying we're going to see 45 or something like that? No, not necessarily. I think some point this week, we're going to, as long as we hold that 472 to 470 level, you will see some type of move right back and retest that 478 breakout. Maybe you'll see within with earnings coming up next week. Okay, you got Netflix and you got Tesla earnings. You may see some speculation on earnings for those two names that could pull up the market past the 478 mark, maybe to hit even 480. And I think that will be the last high for January. And you'll see the market started to pull back. Now, typically in an upswing or uptrend, the markets, even on a downside, is extremely choppy. So what do I mean by that? Look at this 30-minute chart that we've experienced since January 12th, last week. All right. And yes, it's been in a downturn. All right. It's been on a downtrend, but look how choppy it is. Every time it hits a high, it dumps, and every time it hits a low. Now, we've been tracking this kind of falling wedge look, and it did break down today in midday. And maybe you throughout this evening, you kind of get a pump back to the 473, 474 level, and then back down. But so what we've been doing today, or last couple of days, is just scalp the markets, right? Trying to find reversals and on the upside and the downside. So for this morning, we called out a nice a scalp on the call side, as we saw that obviously we were very oversold in the pre-market. SPY was down, or SPX gap down about 20-25 points this morning, with the gap above still left unfilled. And then we played a put side all the way down to the near lows of the day, down to 469, and it was kind of a fake out, right? Because this was a good supply or demand zone. All right, and then we played the calls back up a little bit, and then at the end of the day, we scalped one more call on the back on the upside, and we're not holding any positions overnight so far. So wanted to share that with you guys. If you guys are into actively trading both ES mini futures and NASDAQ mini futures, or just SPY or the Q, or even mega cap day trading, or short-term or short-term trades, feel free to join us. You can visit therockTradingCo.com and get 5 free days free trial, and we hope to see you